Hey guys, James here with Waterford Business Solutions, and the release date for this video is April 13th, which means, in theory, if you're watching this on the release day or even the day after, personal tax deadline's in 1-2 days on April 15th. We're releasing this on a Monday. The personal tax deadline for filing will be on Wednesday for most U.S. citizens here. So we wanted to take a quick chance this week to talk about what are the penalties for personal tax filing if you don't file an extension, file your return, and or pay your taxes on time by this Wednesday on April 15th. Now, ultimately, it is going to be too late for us to get a tax return filed for you by April 15th, but if you're still needing a tax return done, we are happy to get an extension filed for you if that's what you need. If you want to give us a call here at Waterford Business Solutions, 864-351-0852, or shoot us an email at info@waterfordbusiness.com. We'd be happy to talk with you and see if we can help you out in these next few days to make sure we at least get that extension in. And that's going to be the beginning of it. The first and foremost thing you need to make sure is that by April 15th, you either have your return filed or an extension in. If you do not file or extend your return by April 15th, you will receive a penalty, a non-filer penalty. So basically, just because you didn't file on a timely basis, they will penalize you and give you a fine on that in and of itself. That fine will then collect interest until you actually file that tax return and pay the fine that is. But that will be one of the first penalties that you can have occurring to you. The next one is an extension doesn't guarantee you more time to pay. An extension is simply more time to file your tax return. All taxes are still going to be due, at least federally, by April 15th. Which means whatever taxes you think you might owe for the year, for the month, whatever it may be, you still have to go ahead and make sure that those are paid into the federal government by April 15th. So you either have to pay that when you file your extension, you've got to go online to the IRS's website and do an online payment, or you've got to make sure that you have a check in the mail and post dated. And more importantly, on that post date, keep in mind the Postal Service said that the post date doesn't mean that that is when they have the mail anymore. So if you are mailing a check on Wednesday, on April 15th, to pay for something, or you're mailing your tax return on April 15th, and you're going by mail, you need to make sure that you go into the post office and get the post office staff member to physically stamp it while you're in the post office so that it is dated that they had control of it by April 15th. Otherwise, the IRS is going to take a look at the date of whatever was put on there, and that could be the same day, or it could be up to 2 weeks later, according to the USPS there. So, big thing to watch out for there this year. It's a big change that we've seen. But if you don't have your taxes, all your taxes paid in by April 15th, then you're going to get an underpayment penalty. So based off of how much you owed and the fact that you didn't pay, they're going to assess a penalty on you for not paying in a timely manner. So that's another penalty. Once again, that penalty could get or will get interest accrued on the penalty along with whatever taxes were not paid by April 15th until you pay that off. So that can become very strong. I mean, I've had clients come to me 2, 3, 4 years later who haven't paid their taxes, and if they had filed their tax return and paid their tax return back in 2023, April 15th of 2023, like they should have 3 years ago, they would have owed $1,000. But because they didn't, and they got the non-filing penalty and the underpayment penalty and all the interest. Now they're owing $2,200-$2,300 due to all the penalties. So it's twice as much, if not more, than what they would have owed if they just took care of it in the first place. So that can really increase your tax burden if you don't take care of those. So it's really, really, really important that you make sure that you are coming in and you are taking care of that extension being put in and the payment being put in by April 15th. Now, that's just for not being filed on April 15th. We also have penalties for not paying in throughout the year. On your tax return, you may have an underpayment penalty that gets calculated for you. So what the IRS says is that you have to, as a taxpayer, pay in a reasonable amount of taxes owed throughout the year. Now, when you're a simple W-2 employee and your employer is going ahead and just taking the W-2 taxes out for you, most of the time, as long as you've got your W-4 filled out correctly, you owe very little at the end of the year. You get a small refund at the end of the year. Might be $200-$300 one way or the other. You don't have to worry about these underpayment penalties. But if you're a 1099 contractor, you're a small business owner, you sell a house, you've got a bunch of investments, anything like that, it could go ahead and come in here and cause you to receive this underpayment penalty, because those are things that do not have taxes, generally at least, paid in automatically for you through the employer or through the institution. Those are things that you manually have to go in and take care of your taxes with. That is why there's such thing as quarterly estimated tax payments. If you've ever seen that on your tax return, that's what those are in conjunction to. You're required to, throughout the year, take whatever you think you're going to owe for the next year, divide that into 4 payments, and pay it in 4 separate payments on April 15th, June 15th, September 15th, and January 15th. That way the IRS is getting your tax money in a reasonable time. That's your quarterly filing. If you don't do that, the IRS comes back and says, okay, you should have paid in X amount per quarter. You actually paid in Y amount per quarter. And so we're going to take that delta, whatever the difference is, and charge you an interest rate on it. Right now, that interest rate is about 7 to 8%, depending on the quarter. And that interest rate is based off of what the federal prime interest rate is, and then increased from there. So it is a good way to rack up some extra tax dollars. We're not talking a huge difference here. For most people, we're going to be talking $60, $100, $500, but there are clients that they can end up with a pretty large balance, and they may end up owing $2, $3, $5, $10,000 in tax penalty. Now, at the end of the day, it's a small portion of the taxes that they owe, but it's an increase in what they owe. So that's another penalty that you can end up getting if you're not paying in on that estimated basis. Now, at this point, there's nothing you can do about that for 2025, but you can start planning for that for 2026. That way you don't end up with those in 2026. That's really the main penalties and the main extra expenses you can get just in filing a personal tax return, at least federally. We're not getting into all the state stuff. There's too many different things to do there. But you could get if you end up under a tax audit, you could get a accuracy penalty for not accurately reporting your income if the IRS finds that you misreported something on your tax return. And that penalty will be one fee, and then again, whatever taxes were owed, if it increases the taxes you were owed, you'll owe more taxes, then you'll get an underpayment penalty, then you'll get interest on the taxes that were owed and the underpayment penalty too. So that's why we want to make sure that we are fully prepared for a tax filing so that we can make sure that that return is as accurate as possible, and that way we avoid accuracy penalties there. There are other penalties, but those are going to be kind of the four big ones that we see. Um, an accuracy penalty, a underpayment penalty, a non-filing penalty, or a kind of again another underpayment penalty for not paying in your taxes by April 15th. All four of those are going to come with some form of interest or straight up penalty fee from the IRS. That's why I want to stay on top of taxes and not worry about this. Now, some of you may have an extension due to a disaster relief. We've done a video on that in the past. You're more than welcome to go ahead and go back and rewatch that video. But having that extension may not actually exclude you from some of these penalties that I'm talking about. So definitely bear that in mind. But at the end of the day, making sure that you get things filed on time and you get things paid on time, that's the only way to avoid this. And that's why staying on top of everything every single day, every single month, makes the beginning of the year so much simpler and so much easier. Now, if you want help staying on top of all that, feel free to go ahead and like and subscribe to our channel here. We put out videos every single week just to help people understand their finances, think about them, analyze them, and just get better at managing their finances and their life. Share this video with anyone that you think may benefit from it. It really helps with engagement. And like I said at the beginning, if you need an extension or if you need to talk about any of this stuff, please feel free to give us a call here at Waterford Business Solutions, 864-351-0852.